$600 million for Foodpanda Taiwan. Grab is finally leaving the Southeast Asian nest.
Oh, please. Taiwan is right next door. That's not leaving the nest. That's just hopping to the neighbor's balcony.
For Grab, it's a massive geographic leap. But getting this past Taiwanese regulators is going to be an absolute bloodbath.
The market share overlap is definitely wild. Speaking of things that are hard to swallow, wait until you hear what Danone is serving up next. The rundown. I just want to know who was sitting in the boardroom when Fresh Del Monte Produce agreed to pay $285 million to buy assets from Del Monte Foods.
It is literally the Spider-Man pointing meme in corporate form.
They split the brand up decades ago, and now they're just slowly eating each other.
Speaking of eating things, the AI infrastructure grab is getting wild. Goldman just put out a note attributing this whole M&A surge to monetary easing and AI panic.
Panic is the right word. Fasoo is merging its US subsidiary with an AI consulting firm just to launch a new entity called Symbologic. It sounds like a supervillain corporation.
Rebrand by merger. Classic. But look at Ecolab, a chemical and water treatment company, is buying Cool IT systems.
Liquid cooling for data centers. Cool IT is projecting $550 million in sales next year. Ecolab realized you can't just sprinkle AI on your pitch deck. You actually have to keep the servers from melting.
That's a classic picks and shovels play. Speaking of dry pipelines, Abbott is officially finalizing the Exact Sciences acquisition today.
Bolstering the cancer screening portfolio.
They had to. I was talking to a healthcare VP yesterday, and the panic over late-stage pharma assets is real. The supply is totally drying up despite massive buyer interest. If you can't buy a cure, buy the screening company.
Okay, but we need to talk about Danone buying Huel.
The tech bro sludge finally getting a corporate parent.
Don't call it sludge. It's functional nutrition.
Maya, it's beige powder that tastes like drywall, but strategically. Brilliant move by Danone. They need the Silicon Valley optimizer crowd.
Brilliant? Oh, come on. They're buying a peak hype brand right as meal replacements are losing ground to GLP-1 drugs. People aren't drinking powdered oats when they can just take a shot to stop being hungry.
I strongly disagree. Huel is a cult. Cults are immune to macro trends. You're looking at the footnotes. I'm looking at the lifestyle branding.
I'm looking at reality. We'll see what the write-down looks like in 3 years.
Speaking of actual food, Grab is making a massive leap out of Southeast Asia.
$600 million for Delivery Hero's Foodpanda operations in Taiwan.
First time, they're really stepping out of their home turf.
And right into a regulatory buzzsaw. We need to look at the antitrust filings on this one, because Taiwan is not going to make this easy. The big one.
Grab is officially leaving the nest. Southeast Asia wasn't big enough anymore, so they are dropping $600 million to buy Foodpanda Taiwan from Delivery Hero.
I am still trying to figure out who is actually winning here, because when I read the release, it just looks like Delivery Hero finally found a buyer for a heavy bag they have been trying to drop for months.
Oh, come on. It is a classic land grab. Literally, Grab gets instant market share in a highly lucrative, high-density market. They are basically buying a turnkey operation.
A turnkey operation that comes with a massive regulatory target on its back. Foodpanda and Uber Eats essentially run a duopoly in Taiwan. Grab is stepping right into an antitrust minefield. The deal is supposed to close in the second half of the year, but I will believe it when I see the Taiwanese regulators actually stamp the paperwork.
You are always so bearish on the regulatory timeline. Look at the big picture. Grab has spent the last decade fighting off rivals in Singapore and Indonesia. They won the super app war. Now they need a second act. Buying Foodpanda Taiwan gives them a foothold in East Asia without having to build a fleet of scooters from scratch.
$600 million is a steep price for a foothold. And let's be honest about Delivery Hero. They are desperate to improve their margins. They have been shedding assets globally just to keep the lights on. Grab is paying top dollar to solve Delivery Hero's balance sheet problem.
See, my old banker brain looks at that $600 million and thinks that is actually a fair premium for market dominance. Plus, it is a cash deal. Grab has the balance sheet to absorb this. They are flexing. Goldman Sachs just put out a note saying we are going to see a massive surge in M&A this year because of monetary easing. Grab is just getting ahead of the curve.
But the Goldman note was talking about companies buying AI assets to fix infrastructure gaps. Grab isn't buying AI, they are buying a fleet of pink mopeds. I dug into the footnotes on the local market share. The margins in Taiwanese food delivery are razor thin. You have incredibly high consumer expectations, high courier costs, and zero loyalty.
Sounds exactly like the market's Grab already dominates. They know how to run this playbook, squeeze the unit economics, bundle it with financial services, and wait out the competition.
But they don't have their financial services ecosystem in Taiwan. That is the whole point of their super app model. In Singapore, I buy my noodles, pay with GrabPay, and get a microloan. In Taipei, they are just another guy dropping off dumplings. The synergy math does not add up.
Okay, that is actually a really good point. The cross-sell isn't there yet, but you have to start somewhere. If they can flip those Foodpanda users into a broader Grab ecosystem over the next 2 years, 600 million looks like an absolute steal.
That is a massive if. I will be watching the early regulatory signals out of Taipei tomorrow. If they get any pushback on antitrust grounds, this whole strategy stalls out fast.
Speaking of questionable menus and sudden appetites, we need to talk about Danone deciding they want to feed your favorite tech bro. Voices. Goldman Sachs put out a note this morning predicting this massive M&A surge, and they are pinning it on monetary easing and rapid AI advancements, which sure sounds great on a slide deck.
I read that note. I buy the AI part, but the monetary easing argument feels lazy. Look at what the market strategists are actually saying. They are pointing out that companies are scrambling because they have massive infrastructure gaps. They literally cannot build AI capacity fast enough organically.
I think you are underestimating the rate cut optimism, Maya, but I agree on the infrastructure panic. Look at Ecolab. They just agreed to buy Coolity Systems.
Coolity? Capital I, capital T. I love a terribly named tech asset.
It is aggressively bad, but they do AI data center liquid cooling. Ecolab expects them to do 550 million in sales next year. That is not a cute little bolt-on. That is buying a fire hose because your servers are melting.
Exactly my point. It is panic buying, not some elegant strategic shift. And Goldman's rosy outlook totally ignores sectors where deals are hitting a wall. The whisper in pharma right now is a complete scarcity crisis. Buyers are circling with cash, but the attractive late-stage assets are just gone.
The desperation out there is real. Look at the Nubaru drama.
Wait, the industrial laser guys.
Yes, they just suddenly revived that completely stalled agreement to take a 70% controlling stake in Techni SPA. It was dead in the water, and now it is a total zombie deal.
When the pipeline dries up, you start digging through the recycling bin.
Harsh, but probably true. Speaking of digging into new territory, we need to talk about what Grab is doing in Taiwan. Dropping $600 million on Delivery Hero's Foodpanda operations is a massive flex. Spill the tea.
Okay, explain to me how a deal that was completely dead and buried 2 months ago is suddenly the top priority again.
You're talking about Nubaru.
I am talking about Nubaru. They just randomly revived their agreement to buy a 70% controlling stake in Techni. I swear half my job lately is tracking zombie deals. Did someone just find a bunch of loose change in the couch cushions?
It's the classic banker move. You walk away from the table, let the seller sweat for a quarter, and suddenly the valuation gap magically closes. It's corporate ghosting. Highly effective.
Or highly desperate. Speaking of desperate, have you seen the panic in the pharma sector this week?
Oh, the scarcity crisis. Yes, it's getting ugly out there.
Is it an actual crisis, Nate, or are buyers just whining?
It's absolutely real. The pipeline for attractive late-stage assets is bone dry. You've got all these massive war chests sitting there, zero targets, and the clock is ticking on patent cliffs. Big pharma is sweating.
I don't buy the crisis narrative. There are plenty of assets. Big pharma just doesn't want to pay the massive premiums required to pry them loose right now. They want a bargain, and they're mad the market won't give it to them.
When supply dries up, you either overpay or you pivot. Look at what Goldman Sachs is saying this week, and they're projecting a huge M&A surge, but it's entirely driven by AI and infrastructure. Market strategists are literally saying companies are buying AI platforms because organic investment is just too slow.
Exactly. If you can't build it fast enough, you buy it.
Which brings us perfectly to a company that is definitely buying its way into a new geography. Grab is dropping $600 million in Taiwan, and we need to look at those early regulatory signals. Tomorrow's radar. I'm watching Taiwan tomorrow. We should get the first regulatory signals on Grab buying Foodpanda for $600 million.
Good luck to them. Antitrust regulators there are notoriously tough. I give it a 50-50 shot of passing.
Oh, come on. Goldman's projecting a massive M&A surge everywhere because of rate cuts and AI. Regulators know they can't stop the tide.
Regulators don't care about Goldman's AI thesis, Nate. They care about market concentration. Speaking of things rising from the grave, did you see Nubaru?
The Techni deal? Wait, really?
Yes. They just reactivated their stalled agreement for a 70% stake. A literal zombie deal walking.
Amazing. But my sleeper pick for tomorrow is Madrid. Gibson Dunn is aggressively staffing up there. European regional deal value just tripled.
Finally, you're looking at actual data instead of just repeating banker pitch decks.
Hey, those pitch decks bought my first car. We'll see who's right about Taiwan tomorrow.